What's up, everyone? It's Karthik with MoneyVest, and yes, a very short beard for this market update, so I really got it down to number one. But nonetheless, we got lots to discuss in today's market update. We've got ASML recovering just a little bit. I sent out some buy orders on ASML, picked it up roughly in the 690s, and it's back above $700. I sent out a huge update on ASML in terms of the video, so 33-minute video on YouTube. Definitely do check it out if you have the time. Deep dive and due diligence on this company. But of course, TSMC coming out with some blockbuster numbers. Netflix also reporting some very decent beats and increases on subscriber counts, as well as retail sales coming in hotter than what the expectations were. So the markets overall were somewhat flat to slightly up on the day here. So we got lots to discuss on the market update today. As always, make sure that you drop a like and subscribe to the channel. Got NASDAQ here essentially flat, S&P flat. The Dow Jones was the only one hitting new all-time highs, pushing up over 37 basis points, up over 161 points on the day. And of course, gold prices also trading back up to all-time highs here, on their way up to as much as $3,000 per ounce. So make sure that you drop a like, subscribe to the channel, and do me a favor and share this video with your friends, family, other traders, investors, and other Discord groups, Telegram, WhatsApp, Facebook, whatever it is. Just blow it up so we can have more people join us and have a very lively discussion and debate about the markets. Also, do check out the links down below if you are interested in joining our MoneyVest community. Got a few more spots open, so MoneyVest community, couple spots, and the MoneyVest education tier gives you access to all the courses, options course, psychology, fundamental, technicals, over 200 plus videos, as well as our MoneyVest website, options portfolio updates, every single thing, including our trade alerts. So in terms of the options portfolio, the SOXL puts are now up 41%, and Tesla calls that are expiring tomorrow, which is going to be a Friday, are up over 96%. So these I'm going to be closing out tomorrow, and then I will be sending out new alerts for the options portfolio tomorrow as well for the following next week. So every Friday and every Monday you can expect the trade alerts. So link's going to be down below with that 16% annual discount that's available until the end of this month. And I also posted our options trading checklist. This has taken me a lot of time, and when I say time, many years to develop. This is a 2-page PDF that you can access with the 24-minute video going over my full 44-point options trading checklist. I think it's going to be very useful, very helpful. If you're trading options, you definitely want to consider everything that's on this piece of paper to help you become a better trader, investor when it comes to trading options. And I'm also going to be putting out my shopping list. So there's, again, a lot of updates coming out for members recently. And the shopping list is going to include, once again, a lot of stocks that are the highest quality that I'm planning to buy. I'm planning to dollar cost average on the next potential pullback. So you've got a plan ready. You know exactly what you're going to be picking up at what prices. And in my previous shopping list update, where I shared 37 stocks in ETF, of which 27 were stocks and 10 were ETFs, this came out on July 25th. I did the math. I essentially went back and did some calculations. Of the 27 stocks that I shared, 7 are still red, 20 are green. So that is a percentage of probability that is successful, 74%, with an average gain of 19%, median gain of 16%, average loss of 12%, and a median loss of 6.5%, of which 22 stocks are up on a year-to-date basis, which is a 81% success rate. So there's only going to be highest quality companies and stocks listed in this spreadsheet, which is going to be available on our MoneyVest platform. Starting with jobless claims, coming in at 241,000, so which was a little bit lower than consensus of 260. Retail sales coming in very strong at 40 basis points, which was higher than the consensus of 30 basis points. And of course, X vehicles month over month coming in 50 basis points, which was also significantly hotter than the consensus of 0.1%. And X vehicle and gas coming in 0.7%. So very strong consumer continues to spend money, and we're seeing retail sales coming in very hot. So energy sector recovering back to the upside as oil prices recover here, 0.48% higher. Technology was the second big leader on the day, thanks to Nvidia once again. So if you come over to our Mag 7, you'll notice that Nvidia was one of the only stocks that was up quite a bit, about 90 basis points, which is once again when it comes to Nvidia, almost $30 billion, right? So $30 billion is a pretty big amount. Amazon, the second best Mag 7 stock, up over 34 basis points. Then Apple flat, Microsoft flat, Meta flat. Tesla was slightly down. Google was down over 1%. Netflix down 2%. However, after hours, Netflix is bumping up to, I think, back above $700 per share. It is up a little bit over 3.5%, back up to $711 at the moment. So all in all, technology was up over 30 basis points, financials pushing higher, materials was slightly up, NASDAQ was flat, SPY was flat, and then of course a lot of sectors selling off, with utilities once again dropping almost 1%. TLT, which is the bond ETF, after a very nice day yesterday, down about 1.5%. So we're seeing once again this market not able to make up its mind in a very strong dilemma of risk on, risk off. We're pushing higher, pushing down, pushing up, pushing down, and that's really been a lot of back and forth. It's kind of like every single day the market's trying to evaluate the future and what that situation is going to look like, with a soft landing, hard landing, no landing, rate cuts, rate increases, inflation, recession. And so we're just kind of bouncing around between a lot of these different sectors right now. So $6.8 billion loss on the S&P 500. So big three gaining over 40 billion, but don't fool yourself. Nvidia made up for majority of those gains, over 30 billion coming from Nvidia alone. And of course, top 10, we had over $40 billion as well. Once again, Nvidia, the big leader, over $30 billion coming from this particular company. I'm actually going to be rolling out Nvidia further to unlock more capital gains. So again, if you want to get access to all those trade alerts and find out exactly what I'm trading in my options portfolio, which is also beating the market this year so far, year to date is up over almost 30%. We're doing pretty well, so we'll be rolling those contracts out even further to unlock even more capital gains. Broadcom was the second biggest winner in the S&P 500, up almost 22 billion. Then we had Blackstone, Amazon, Visa, Apple, Travelers Company also pushing higher, Chevron, Microsoft, and Chubb Limited. All of them were the top 10 gainers on the S&P 500. Of course, top 10 losers. Google down the most, over $27 billion, followed by you've got Elevance Health, we got Netflix, United Health, then we got Uber Technologies, Union Pacific, AppBee, so on and so forth. Again, down anywhere from $3 to as much as $27 billion on the day. Now, talking about TSMC, popping over 10% after the quarterly profit, soars on AI demand. So this right here is where we ended up with TSMC up almost 10%, $205, brand new all-time high. TSMC, one of the biggest, if not the biggest, chip manufacturer in the world, controlling over 90% of the market share for advanced microchip production. So one of the biggest foundries in the world, reported numbers of about $10 billion in net income, and revenue came in at $23.5 billion in the third quarter, up 36% on a year-over-year basis. And in the Thursday's earnings call, TSMC chairman and CEO stressed that AI demand is quote-unquote real, and the company has experienced the deepest and the widest growth of anyone in this industry. And we have talked to our customers all the time, including our hyperscalers customers who are building their own chips, and almost every AI innovator is working with TSMC. So it makes a lot of sense because, as discussed in our previous updates and the video that I've just posted earlier today, TSMC is the leader when it comes to chip manufacturing. And of course, ASML is very much one of the biggest suppliers of TSMC's equipment for lithography equipment as well. So definitely do check out that video because I did spend a lot of time putting it together. Just spend a lot of time researching, analyzing, putting a due diligence together for both TSMC and ASML. The focus, of course, was ASML, but we talked about TSMC quite a bit in that video as well. Netflix, on the other hand, also beating third quarter subscriber numbers barely, but ad tier members jump over 35%, earnings coming in $5.40. So strong beat there. Revenue just shy of $10 billion. Again, another beat. And paid memberships grew to over 282.7 million. That's up from 282.15 million. That was the expectations. Added over 5.1 million subscribers during the quarter, more than 4.5 million Wall Street expected. Again, in total, they have now sitting at just under 283 million subscribers across all its pricing tiers. And again, a very, very nice bump in the after hours, up a little bit over 4% now, getting up to $716. I assume the earnings call might be going on right now as I'm recording this video. The company noted Thursday that it expects revenue in the fourth quarter to be between around $10 billion and earnings per share of about $4.23. And for the entire year 2025, revenues to be between $43 and $44 billion as it improves its core series and film offerings and invest in new initiatives like ads and gaming. And much of that revenue growth is expected to come from what called the healthy increase in paid memberships as well. So very nice recovery from Netflix, as we already know that Netflix for the longest time did not have an ad supported tier or really an ad business. And ever since they made that change in May 2022, the stock prices, of course, recovered really well, hitting new all-time highs, pushing up over 349, almost 350% for the company as well. Now, gold prices. Gold is hitting almost a new all-time high here. I think it did get up to an all-time high today. There we go. So it's now sitting at just shy of $2,700 per ounce. There are targets up to as much as $3,000 to as much as $3,300 per ounce moving forward as well. And you'll notice that, gold for the longest time was consolidating sideways, had a little bit of a cup and handle pattern here, and of course had a huge breakout to the upside, and we're now sitting at just under $2,700. We did see a lot of consolidation sideways for about 10 years. Gold really didn't go anywhere. So this was like a lot of consolidation, and of course finally broke out of this consolidation range, getting up to over $2,700 to new all-time highs. So I'm very bullish on gold, as you already know if you're following us on the MoneyVest channel for a long time. I've been buying gold for a really long time, although a very small position, but I'm up anywhere from 51 to 60% on my original gold purchases. So I will continue to dollar cost average. It's a good way for me to diversify a little bit further into another asset classes, which is significantly uncorrelated compared to equities and bonds and real estate. And this right here is where we are with the MoneyVest index. So just a little bit shy of 4 right now. We were sitting at just about 4 yesterday. Volatility is just a little bit over 19. So again, still pretty elevated in the 57 percentile. If you're still in backwardation, about 2.5%. And then of course, we've got majority of stocks again trading back above their moving averages with the put call ratio, which right now sits at about 0.991. So we're getting very, very high on the put call ratio as well, with the R side over 63 in the 76 percentile at the moment as well. So the risk reward not super favorable. We're going to be deploying this MoneyVest index value and the risk reward favorability onto our MoneyVest website very, very soon, along with the shopping list for about 20 to 25 stocks. So expect both of those updates by the end of October. I'm going to update everybody on Discord and of course on YouTube that these two major updates are available on the MoneyVest platform. That's going to be the MoneyVest index with the risk reward favorability. There's going to be a nice little dial that's going to show you where we are on the risk and reward, and more importantly, the shopping list according to my personal analysis of the highest quality companies. And you've already seen their track record. They tend to be very, very high quality businesses that we put on the shopping list with our buy targets, of course. So again, links can be down below if you want to sign up for the MoneyVest website. It is a very, very useful tool, and I'm sure you won't regret it. It's going to be a lot of value if you want to invest for the long term, and of course learn how to trade options. And of course have a community that can help you in your trading and investing journey. Now, coming over to volatility first. So we are at just a little bit over 19 right now, still pretty elevated. Every time we've gotten up to as much as 20, 21, 22, around those levels. Of course, this was well over 36, 37. This right here, we are well in the 20s. This right here, once again, we're well in the 19s and 20s. So still pretty elevated, but the markets continue to trade near all-time highs, although we did see a lot of selling pressure intraday. And of course, coming over to crude oil, we're seeing a lot of consolidation sideways once again, and this right here is the daily chart where we are seeing a breakdown below $73, $74 per share once again. We'll go ahead and turn this level back into a resistance, still up in the month of October, but of course significantly less than what it was just a few days ago. So that's a good sign, because if we see oil prices move higher, then that's most certainly going to be affecting inflation, and that's what we're going to find out in the November report for the month of October. But it's a good sign that we're starting to see, crude oil prices roll over once again. They're already down over 10, almost 11% from their highs of back on Tuesday, October 8th. Now, coming over to the market, so S&P 500 here, pretty much trading near all-time highs of well over 58.78. So we're just shy of 5,900 on the S&P. Of course, a lot of selling pressure coming in. And again, support level is going to stay put right here at 56.70, down to this higher low of 55.60, down to as low as 54.50 for S&P 500. The NASDAQ also in a very, very similar situation. If you were to kind of extend this out a little bit further, we're still in the context of this higher high and higher low pattern. So it is a bit of a rising wedge, as we have discussed before, which obviously is not the most bullish pattern of all, because this usually kind of reverts back with a breakdown. So this is the overall pattern. If you continue to trade in this coiling wedge, or this rising wedge as I like to call it, eventually we could see a little bit of a breakdown as well. And that support level is going to stay put at 17,750. For whatever reason, if you do get a nice little breakout, then of course we're off to the races with new all-time highs coming in very, very well. But that's most likely going to be a post-election, post-Fed breakout if there's going to be a lot of volume stepping in with the liquidity that's also sitting on the sidelines with over $6 trillion of cash that's in money market funds. So all in all, that's a resistance to keep in mind at 18,600. We got a support level sitting roughly at 17.7 if we actually end up seeing a little bit of a breakdown from this rising wedge pattern. But right now, kind of tagging on to this higher high, and support level is going to stay but roughly at 18,220 inside this sort of rising wedge uptrend. Coming over to Apple, and Apple also is starting to, again, struggle a little bit around here. This is an area of resistance we've talked about in the 232, 233 range. And support level is going to stay put down to 217. And then, of course, we got the all-time high sitting well over 236, 237. We did have a pretty long wick to the upside on Monday, or actually on Tuesday. A lot of sellers stepping in to bring Apple stock back down. And that is going to be that resistance to keep in mind at 237 for Apple. Amazon, on the other hand, also consolidating sideways. So this is a little bit of a symmetrical triangle that we continue to keep kind of brushing across. So this right here, the higher low, and we got a resistance that's sitting roughly at 187, 189. And that's going to be that level to keep in mind. Of course, we got the lower high also coming in from the top. So all in all, Amazon's also struggling with that resistance right about there at the moment. Coming over to PayPal, and PayPal here also consolidating sideways, trading below its resistance of $80, $81 per share. So this right here is a level that we have talked about on the channel before. A lot of consolidation. Support level is going to stay put right here at $76, $77. So again, just pretty much trading sideways. If you do get a breakout above this, this level will turn into a support, and the next target is going to be $88, $89 for PayPal moving forward. Talking about Visa, and Visa also with a very nice move to the upside, up over 1%, getting back up to that resistance at close to $290, and that is the resistance where we are trading. As you can see that we had a very nice little breakdown for Visa, down about 8.4%. This was a very strong area of demand, very good support as we identified in our market updates, and a nice little recovery back up of over 8% for Visa. So very nice move to the upside for this company right now. Coming over to Tesla. So Tesla, of course, also struggling a little bit. So a lot of consolidation sideways in that range, continues to pretty much go nowhere. But we also do have earnings coming up next week. So next week's going to be a pretty big move for Tesla because the deliveries are behind us. The robotaxi event is behind us. And now the third and the most important event is going to be coming up, which is Tesla earnings. That's going to be on October 23rd. It's going to be a Wednesday. And the calls that I'm going to be selling is going to be for next Friday. So that's going to pretty much cover the earnings volatility. Now, I'm going to be going a bit more lower on the call strike. And if earnings do come out very strong and we see a big spike on Tesla, I will most likely be rolling them out for the following few weeks so I can increase my call strike further, because I obviously don't want to get rid of my shares at 230. Going to be breaking some of my rules here, but you got to do what you got to do. And I also mentioned in the options checklist, because if you actually do watch that video, which is a 24-minute video, and of course download this entire checklist, you'll see one of the things that we consider of the 44 points that I've put together on this checklist. One of them is don't sell a call with a strike price below your cost basis. That's one of the most important rules, because that would guarantee a loss, unless there's a caveat to that, unless of course you know how to manage your call options and roll them out. So in that case, of course, I will be looking at Tesla calls for next Friday with a higher strike to put me back out of the money, and of course generate a net credit in the process as well. So that's where we are for Tesla. A lot of consolidation. This right here is where the resistance is at 235. If you, for whatever reason, get a big earnings surprise in the good way, we could see 235 for Tesla, next week. Of course, that's not a lot of move. That's only a 5, maybe 6% move to the upside. But of course, if there's anything but disaster in Tesla's earnings with margins compression, profitability going down, then Tesla could be in the low 200s, possibly sub 200s also fairly soon, considering so much volatility going into next week. But right now, we can take advantage of the sideways action, and that's what we're witnessing right now. A lot of consolidation pretty much happening for Tesla. Coming over to Nvidia stock, and Nvidia also getting rejected after hitting a new all-time high. New all-time high today for Nvidia, getting up to 140.89. So as we know that a lot of bulls kind of doubled down in the last couple of days, they picked up a lot of call options on Nvidia, and I think that's really what we witnessed. A lot of covering, a lot of closes on the options chain for Nvidia, pretty much because it got in the money briefly, getting up to over $140. Pretty much everybody who has ever owned Nvidia at one point was profitable on the stock because it hit a new all-time high today. So we did see a little bit of profit taking. We did see some calls close out before tomorrow's expiration, so getting that rejection there at 139, 140, and of course trading back below 140. Support level is going to stay put at 129, close to $130, and again a lot of consolidation sideways. And even me myself, I will be looking at rolling out my Nvidia calls once again, right? Because I don't want to get rid of my shares, and of course I can capitalize on that net credits and of course keep generating and unlocking some more capital gains. Now coming over to advanced micro devices, and AMD also coming down, still trading inside this uptrending channel, higher highs and higher lows. And so this right here is going to be that support level to watch for AMD. Resistance stays put roughly at 170, 171 for advanced micro devices. Coming over to Enphase. Enphase continues to be very, very weak, down about 1.6%, trading in the low 90s. And similar to ASML, I've also got a video on Enphase coming out very soon, so I will be posting that for everyone. Very, very soon. I'm going to be spending a lot of hours, a lot of due diligence on this company, although I've already spent a lot of videos, a lot of hours on this company already. But there's going to be a bit of an update on Enphase stock very, very soon as it continues to trade down pretty much in the low 90s again, and support level is going to be inside this green rectangle in the low 80s for Enphase. So another video, very detailed analysis coming up on Enphase very soon. Very oversold on the RSI and the MACD as well. Costco, on the other hand, continues to consolidate sideways. We got a lot of support levels to watch for, but right now we're seeing Costco pretty much trade in between that range of $872 and $919. So a lot of consolidation sideways in that range, all the way down to $839, down to $785 for Costco. Now coming over to Meta platforms, and Meta here also starting to see a little bit of a breakdown below 581. Support level roughly at $540 for Meta, and resistance all the way up to as much as $602. Of course, it was very, very overbought on the RSI, the MACD, and the L3 banker oscillator as well. So it's not a surprise that we're seeing a little bit of a pullback on Meta platforms. And then, of course, finally coming over to Netflix and Google and Microsoft. Netflix did sell off and broke down below that support of $699 on the day, but of course, after hours, whole different story. It's back up 4.5%. Pretty much, not only the losses from today, but gaining even further, back up to $719. We're most likely going to see a huge gap up tomorrow. That $699 support is going to stay intact. Resistance is going to stay put at $725. Would not be surprised if that momentum carries us to break out above $725 tomorrow, potentially even to new all-time highs at $735, $736 for Netflix. Going over to Google, and Google also consolidating sideways. I'm really contemplating getting rid of Google here, just so I can do more analysis and research on the future of what search and what Google is going to look like. Year to date, the stock is essentially up over 17%. Google and Microsoft have been one of the worst performers, in the markets among big tech, apart from, of course, Tesla. Tesla's still flat on a year-to-date basis. But Google and then, of course, Microsoft's performance has been really, really bad. I mean, it's been so subpar this year. Year-to-date, it's only up like 11% or something, 11.5%. And, of course, seeing a lot of consolidation sideways. Even Amazon, I think, has performed better than Microsoft. Amazon is up over 23%, so more than twice of Microsoft. And Apple is up, I think, also 20-25% around those levels, 24%. That's how much it's up. And of course, Tesla's flat. Meta's performed really well. It's up, I think, in the high double digits here, 64%. And Nvidia, of course, in the triple digits. It's done incredibly well. It's up over 100%. 178% on a year-to-date basis. So Microsoft, one of the worst performing stocks of big tech. Tesla, of course, is also there with pretty much flat gains. I don't think it's even up year-to-date. So Tesla, down 11%, so not performing as well. But Microsoft support level is going to stay put in the low 400s, resistance all the way up to as much as 432 for this company. So when it comes to tomorrow, we do have a lot of earnings coming out. We're going to pretty much be ending up this week, most likely on a green note, considering the S&P 500 had pretty solid gains earlier in the week here. So we're up over 45 basis points so far on the week, and the NASDAQ is up over 17 basis points right now, pretty much trading near all-time highs once again. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and subscribe to the channel, and also don't forget, get access to our entire full access MoneyVest platform, Patreon, Discord, trade alerts, members only videos, our PDF checklist. Everything's going to be available with the link down below. There's a 16% annual discount available until the end of this month. So another 2 weeks left if you want to take advantage of that with the link down below. As always, happy investing. I'll see you all in the next video.